Hello everyone, this is Mutaz from Schooley Mitchell Consulting, the cost reduction experts. We have received a lot of questions regarding our referral program, and I wanted to create this video to answer some of these questions. However, before I go ahead with that, I wanted to share with you this PowerPoint presentation about Schooley Mitchell, what it is, and how we work with our clients. This PowerPoint presentation will take around 15 minutes, and then we're going to dive into the referral program and our hiring process as well. All right, so as you see here in the first slide, we are this is industry insights. On average, organizations spend 35% more than they need to on business services. So in general, most businesses they spend more than they should on their operational expenses. We see in this point here it says organizations spend 15 to 20% of their budget on operational expenses, and they lack both the time and the special tools to optimize them. And that's where we come in. Basically, cost reduction is our bread and butter. So we spend the time necessary looking over bills and contracts, and we use specialized tools to try to find savings, billing errors, price creeps, and all this kind of stuff that we see in our day-to-day business. So here this talks about Schooley Mitchell. Schooley Mitchell was an accounting firm that was started in 1997, and it became a franchise in 2004. We serve over 29,000 clients in North America. That's both US and Canada. We have produced over $650 million in savings, and our average savings is around 28% per year per client. Our process, savings, we find savings in key service areas, or we call them categories. We have around 14 categories that we look at, and we try to find businesses saving these categories. So some of them, for example, telecom, waste, payment processing, shipping and handling, etc. There's another slide in this PowerPoint that's going to show all the categories. But what we try to do is find savings in these categories for businesses in a variety of industries. And we do work with any industry. We have worked before with the hospitals, with the schools, with universities, cities, municipalities, all kind of businesses, nonprofit, small business, medium-sized businesses, large businesses. We do have a wide range of businesses that we work with. These savings that we find normally they turn directly into profits, so they translate directly into the bottom line of the business. And then we continue to do the work after finding the savings. So there is monthly audits that we continue to do for the terms of the contract. Normally the contract is for 3 years. So we continue to do monthly audits, making sure that the price is not changing, and making sure that we are taking advantage of any deals that happen in the market. Our solution. So number one, we rely on data. We have over 29,000 clients across North America that we use to compare pricing to, in addition to comparing prices to the market and seeing what other businesses are paying. Expertise. We have over 100 financial experts using top analytics. And also we have market intelligence. This is through our proprietary software that allows us to achieve savings and deliver ongoing value. How will you repurpose our savings? The business can do anything with these savings. They can hire more staff. They can renovate their facility. They can do some marketing and try to acquire more clients, or they can donate that money, or simply grow their profits. This is a very important slide. This is our offering. The business, you take no risk. Like for the business does not take any risk. We either save you money and self-fund our fees, or give you a no-cost validation that you're receiving the best overall value for your existing services. So the business does not take any risk at all. Our guarantee, if there are no savings, there is no fee. So if there's no savings at all, there is no fee at all. We share in savings 50-50 over 36 months. So 3 years, we share the savings that we find 50-50. Then you receive the 100% of the savings after the third year. But I have to mention here that most of our clients, actually, I would say around 70% of our clients, they continue with us after the third year. Why? It's just like I like to use this analogy. Let's say you own a company and you wanted to find a CEO that going to run this company very efficiently and make the company more profitable. And let's say you found the CEO and he did a great job for the first 3 years. He saved the company a lot of money, and that money that was saved translated into more profits to the company. So after the 3 years, I assume you're not going to fire that CEO. You're just going to keep them to so they can continue a good job for you. And the same thing here for us. Most of our clients they continue with us after the 3 years contract to so we can review their billing on month-to-month basis and make sure that there's no price creep or billing errors, etc. But anyway, like yeah, the business is not obligated to us after the 3 years. After the 3 years, they can just receive the, they can just go on their own, or they can continue with us and have us continue looking at their month-to-month billing. 90% of clients reduce expenses by more than 18%. The average savings is 28% per year per client, and 80% never have to change vendors. This is very important. Most of the time, people don't have to change their current service provider. This is a slide that shows the categories that we consult on. So there's 14 categories here. I'm just going to focus on the main 4 ones because these are applicable on most businesses. So we have telecom here. So that's basically your landlines, your cell phones, your internet, and your VoIP, voice over IP. Merchant services, that's basically your credit cards, debit cards, online purchases, etc. Small package shipping, UPS, Pure Later, FedEx, etc. And waste, that's garbage and recycling. Our saving steps. So the first step here, getting started. So normally for the business to start with us, they need to sign 2 documents. The first one is called service agreement. So service agreement is basically 2 pages document that outlines the terms of engagement for the 3 years. And the second document is LOA. It's a letter of authorization or letter of agency. This is basically allows us to speak on your behalf with vendors and negotiate with them. Then the third thing we need is data. We need data. So basically, these are invoices, contracts, statements, any information that we can use in our analysis. That will be the third thing that we're going to need here. After receiving these 3 items, we start our analysis. That takes around between 4 to 6 weeks. We establish a baseline, meaning like how much you're paying. We do line by line, feature by feature analysis to uncover savings opportunities. We identify billing errors, and we examine the entire marketplace for the best options for you. After that, we do present the value report. So the value report is a detailed report with alternatives presented. Normally, we present 3 alternatives. So the first alternative will be with the incumbent, with your current company. So let's say if we do audit your telecom, and let's say you are currently with Bell, so the first alternative would be with Bell. So we're going to say we negotiated with Bell on your behalf, and they proposed 20% reduction on your current price. And then option B would be, for example, we also spoke with Rogers, and Rogers, they said they're going to give you 30% reduction on your current price. And then the third option, we spoke with TELUS, and TELUS, they said, for example, they're going to give you 35% reduction on your current price. So you're always presented with 3 alternatives. The first option is with your current provider, and then the second and third option are with different providers. The client, choose any recommendation to implement. So you choose whichever option that you would like to go with. The average saving is around 28% per year, we said, for our clients, and 80% never have to change vendors. Partnership fees. So the first invoice you're going to get from us is presented after 30 days from implementation. And this is a very important point here because normally there's, for example, the big four, the big accounting firms like Ernst& Young, Deloitte, KPMG, PwC, they do have a cost reduction unit, but they work different from us. Normally, they focus on larger businesses with a higher amount of revenue, and they work on contingency basis. Sorry, they work on uh, retainer. They work on retainer, so meaning they you pay upfront. So they do the analysis, they present recommendations, and then you pay them right away. So they work on retainer, and they don't help you with the implementation. Versus us here, we work on contingency, meaning if we find savings, we share the savings with you. If we find no savings, then you pay nothing. So this is work on contingency. And then number two, we are there with you step by step to help you implement the recommendation. And also after that, looking at your billing, making sure that there's no price creep, prices are not increasing, uh, billing errors are recouped, and just looking for the best deals for you in the market on a continual basis. So this is very big differentiator for us. We perform quarterly audits over the life of the agreement to look for additional savings. So this is what we continue to do for the 3 years of the agreement. Methodology and value levers. So this is a comparison between Schooley Mitchell and vendors and internally managed costs. Some companies, they do have an internal department that looks after account payable. So this is a comparison between us, them, and vendors. So I'm just going to focus on 3 items here. The first one here, specialized analysis tools to optimize cost. We do have that. As I said earlier, we have proprietary software that does analytics on the markets and uh, does price comparisons and identifies billing errors, etc. Um, and internal department of a company, they're not going to have that because this software is that costs millions of dollars, and this is our bread and butter. This is what we do, so that's why we have that software. For internal department of a business, normally that business is not engaged in cost reduction, so there's no reason to justify spending so much money on a software for cost reduction. Um, so this is one important factor here. Best-in-class pricing database for comparison of all vendors. So as I mentioned earlier, we have more than 29,000 clients. This is all data that we have, in addition to our looking at the marketplace and finding what everybody else is paying. Negotiating cloud from representing 29,000 plus clients when we deal with the vendors. We always say to our clients, when you want to deal with CRA or you want to deal with the IRS, you're going to take with you an accountant. You're not just going to go there by yourself. And the same thing if you have like a court hearing, you're going to take with you a lawyer. So the same thing here, like if you want to deal with a vendor, we always say take with you a consultant. So that's where we come in and help our clients with negotiating with vendors. These are some success stories. So I'm just going to go through them quickly because you can pause the video to read them. This is the second one. And this is the last one here. So this is the end of the presentation. So now I'm going to discuss our referral program. So we do work with referral partners. Basically, if they put us in touch with a decision maker in a business, we pay them 10% of our portion of the savings. So this is some examples of that. I just highlighted the Canadian consultants, but these are some American ones, but we're going to look at the Canadian ones. So our consultant in British Columbia paid a foundation referral fee of 51,000 for referral of a tourism industry client for their merchant services expenses. So that referral partner paid 51,000 for the foundation for referring a business to them that they coverage 51,000 for. Also, this is another consultant in Ontario. He paid another business consultant more than 100,000 for referral of a software company for a review of their telecom expenses. Another example here from Ontario, a consultant paid an individual more than 120,000 for a referral to a construction company for a review of their telecom expenses. The last one here is another consultant in Ontario who paid a tax consultant, so an accountant, more than $2 million in referral fees over the past 10 years for referrals to more than 100 individual clients. So these are examples of some of our refer partners and how much money they made from these refer agreements. It could be very lucrative. This is also the agreement that the referral partner will sign with us. So basically, it talks about their rights and obligations. So the obligation is to connect us with the decision maker in that business. So whether that's the CFO or that's the CEO or the owner or the office manager in that business. And then we'll take it from there. We'll do the first meeting with them, explain the process, sign the paperwork, collect the data, do the analysis, present the solution, and then implement the solution. And then after that, getting our first invoice and our first payment from them, and then pay the referral partner the 10% from that uh, portion of the savings, our portion of the savings. And then this is going to continue for 3 years. If the business continues or renew their agreement with us after the 3 years, then the payment will continue after that. So in a nutshell, the payment will continue for as long as the business stays a client of ours. Uh, and also we're hiring as well. So the hiring is based on the I guess the remuneration will be based on revenue generated. If anyone has more, like if anyone is interested, please feel free to give me a call on my phone number here or email me at this email address here. I hope I answered most of your questions, and please let me know if there's any more questions. Thank you very much, and I'll talk to you soon. Bye bye.